Hey, this is Matt from InvestiQuant. Today is Tuesday, December 1st, 2020. And today is the first trading day of the month. The market has been pushing higher in the overnight session following yesterday afternoon's strong rally. So we've gotten some continuation up into the overnight session. We are trading up in all four of the instruments, some of them more than others, but we've got a pretty strong overnight session that is developing. So I figured we would take a look at what has happened historically in a similar market environment when you are opening above the prior day high on the first trading day of the month. So let me set this up and discover. We're going to look at all four instruments. The setup is going to be based upon getting long at the open, which is 9:30 a.m. Eastern Time. The exit is at 4:15 p.m. Eastern Time. The opening filter is going to be based upon gapping up above the prior day high. So I'm just going to hit equals here next to the opening area of open above prior day high. Then I'm going to go into the indicator section. I'm going to put us in a similar environment. We're trading right up near the all-time highs, but I'm going to put us above a 10 and above a 200-day simple moving average. And then next, I'm going to go into the calendar section, and I'm going to say that is the first trading day of the month. This is a unique day. You can find it right here in our unique day category. It's the first option, so I can hit equals there. I could also just grab it from the active today section. Either way will work, but now that I've got that added, I'm going to click view results. And here we go. So these are the results of going long at the open of regular trading hours, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time, the entry 9:30 a.m. Eastern Time, when opening above the prior day high on the first trading day of the month in a similar environment, which I'm defining as above a 10 and above a 200-day simple moving average. Historically, the S&P has 37 samples of this pattern dating back to 2003. The NASDAQ 34, the Dow 33, and the Russell 24, so pretty similar sample sizes there. And if we take a look at the win rates on these, S&P coming in at 54%, so just mildly favored. The NASDAQ is the strongest of the group, coming in at about 59%. The Dow weaker here, 42%, and the Russell pretty similar to the S&P at 54%. So three of the four are mildly favored. One of them is a little bit weak, but these win rates are not all that strong. You know, the first trading day of the month is often assumed to be a pretty strong day in the markets, and it can be, and certainly has been in certain scenarios, but this scenario here, and this environment with this opening type is not one of the strongest scenarios. We're getting a lot more mild win rates here between the four instruments, with only the NASDAQ being a little bit favored at about 59%. The others are pretty mild. If we take a look at the average win to average loss, you can see the average loss just a touch bigger than the average win in the S&P. The average win just a touch bigger than the average loss in the NASDAQ. The average win a little bit bigger than the average loss in the Dow, which is the one with the weakest win rate. And then the average loss bigger than the average win in the Russell. So overall, not a really strong bias in this scenario on the first trading day of the month. So hopefully you found that helpful. Good luck today, and we will see you next time.